Hey guys, this is Trading Hermit and this is my third video. In today's video, we're going to continue with the intro series. Today, we'll discuss about what books that you should be reading, and also I'll tell you about one trade that I did today. That is how I want to keep things from now on. That I'll tell you in very brief that what things you should be doing, and then the second part I'm going to tell you about how and when did I execute my trades for the day. So yeah, starting with the books that we should be reading. The very first book, Trading in the Zone by Mark Douglas. Crazy book, you will love it. And in the beginning, you might think that, oh, this is just another, trainer talking to you via the book. But no, this book really has some great insights that you'll love, and that'll help you in the long run. Second book, The Disciplined Trader, again by Mark Douglas. So yeah, both these books, basics for traders, and I would say ultimate truth of trading. These books will give you insights of traders who've been in the market for more than 20 years. These books, I don't know, I mean, they're basically treasures for all the traders out there. So, and once you've finished reading these two books, the third book is this, Super Trading. This is for the trained traders. Once you've gone through these two books, the Disciplined Trader and Trading in the Zone, and you've already applied the concepts there in your trading setup, that is when you start reading this. I am halfway through this, I've not finished it, but yeah, this is the third book. So book wise, these three books are more than enough if you're to start reading about trading. And what book I should not be recommending you is, don't go with Rich Dad Poor Dad. Too mainstream, and I really don't think it would help you in any way in trading. I mean, yeah, it'll change your way of looking at things in finance or even about money, but I seriously would not recommend it. I did read it, but not that helpful. It was helpful in times which were very different from what they are now. So yeah, that, and then apart from that, we're talking about news outlets that we should be reading. The news, I follow Bloomberg for the international news, and for the Indian news, I go with Business Standard. Business Standard and Bloomberg, and for some niche news reading and free source, I would go with Moneycontrol. Yeah, that is it. So you can follow these news outlets, and they'll provide you with everything that you need to know. And for the tech related and the finance related, in-depth news, you can follow the Discover column of Perplexity app, the AI app Perplexity. So there's this Discover column right on the right corner of this app when you open it. So that is where you can read all the tech and finance and all the research and development that are going on, or maybe even the major geopolitical issues that are going on around the world. So yeah, and that will provide you with exact amount of insights that you need to know about, the exact amount of brief data that you need. So yeah, that will provide you with the very basics and with the very main things. So yeah, that is about the data and the news. So now coming to the second part, what trade did I do today? I did a trade in gold. So I did a trade in the gold at 6 p.m. in the Indian Standard Time, 6 p.m. So I took a long in gold. It was 43.85. I entered at 43.85. I exited at 44.02.5. So yeah, it was a trade of approximately $17. Not a trade of $17, but yeah, it was a move of $17 that I got. So what was the reason that I got into trade? Multiple reasons. again, because I look at the fundamentals first and then the technicals. Fundamentals, USD was sliding slowly after a very quick rise. So that was one thing, that gold was getting time to breathe because dollar was steadily falling. And second thing, the geopolitical concerns that were being raised around the world. First, Trump talked about Iran and Ukraine. For Iran, Trump simply told that if Iran was to continue with their nuclear program again, it would be considered as an act of war. So that was basically a threat. So that, and then the second thing was Ukraine and Russia are still, at a war, and Trump is trying to mediate things, but it is not going as well as it should be. But yeah, we'll hope for good. So that thing, and then China did some mock drills in the South China Sea, in the face of Taiwan, because it was trying to show retaliation for the US and Taiwan trade deal that happened last week. So yeah, it was just trying to poke USA that if you are to continue trading with Taiwan, you will face a lot of threats from our side. And also that yen, the Chinese yuan is getting stronger and stronger, against dollar. For the very first time, it dropped below 7 on against dollar, 69.99 something. But yes, for the very first time in a long time, it dropped below 7, and that was also a very practical thing to look at. So yeah, all those concerns mixed with the the macroeconomics of it all, the investment banking systems, the institutions, they're not heavily trading before the new year starts. So combining all those fundamentals, gold was bound to reach the supply level of 4400 to 4405. So that was my plan, and it was making constant higher lows on the charts. So now we're looking at technicals for my entry. Now I already made a bias. It fell down from 4560 and touched 4330. So it was bound to go back to the levels, the major supply level of 4400. So that was my plan. So when I look at technicals now, it was going higher, making higher lows and higher highs. So it just made another higher high at 4379. But I took my time, I let it show some bullish behavior again after taking a retracement. So that is when I entered at 4385, and I placed my stop loss at 4379. $6 stop loss I put there, and a target of I was planning for 4404 or 5, but yeah, just because I knew it wouldn't just cross it all together at once. So you have to adjust your targets. You never adjust your stop loss. You can trail it with when you're deep in profits, but you never adjust your target, your stop losses. So yeah, I adjusted my target, $1.5 below with what I planned earlier. So yeah, so when it went up to 96 and it closed above 98, I trailed my stop loss to break even, and then I exited at 4402. So that was my trade. So my reason for entry, the fundamentals and the technicals, and my reason for exit was technicals, and technicals as in 4400 to 4405 was a big supply zone. It acted as a very big resistance zone up until last week, before gold touched its all-time high. So that was a very big supply zone over there. So it would take it a long while to pierce through it. So that was my reason on the technical side. And on the fundamental side, as I said, institutions and investments, the banking system, they are not taking as much part in the gold buying or selling at this very moment before before the new years. So that was one reason. And yes, there were escalations on some part in the trade wars or even actual wars, but it wasn't as much as the gold would go crazy. So yeah, that was fundamentals and the technical side of it. So you can see how I manage my risk. It was a trade of let's say 1:3 RR trade. So yeah, I managed my risk there. I trailed my stop loss there, and my position was I took a very small position rather than a very big position because it was meant to be a scalp. I closed the trade in 20 minutes, I guess, because after that the market went into a consolidation as I predicted. I'm not saying okay, oh, I caught the dip and now I exited at the very right moment. No, it was bound to happen because it was a very big supply zone. Just after I exited, after I mean, yeah, the market went up to 440405, I guess, after that. But after that it went into a consolidation. It was triggering stop losses on both the sides, hunting the stop losses both for both buyers and sellers. So yeah, that happened. So you see how I manage my risk. You see how I put in a small position because the fundamentals were not as good, but yeah, a trade could have been made. So that I took a trade there and I closed at the right moment because I could have stopped for 2 3 more bucks, but that doesn't make real sense in the real market. You have to adjust your targets. So yeah, and that is what I'm telling you. And once I put my trade, I stay away from the screen. I just let the trade play. I just let the trade breed. That is what everyone should be doing. You cannot change how the market's gonna react to after you put in the trade, but yeah, you can uh, make sure that your trade and your risk management is all planned before you're into it. Your stop losses, your targets, your position size must be accurate, must be according to your risk appetite, must be according to your profit taking appetite. So, yeah, that is what you have to plan before getting into a trade. You take entries on whatever time chart. I mean, for myself, I prefer checking from 4 hour to 1 hour, then 15 minutes, and then I take my entries on a 5-minute candle chart. I mean, I do not trade on a 1-minute chart. I found it a little, I find it a little noisy, so I don't do it. I take trade on 5-minute charts and then I let it play. I exit on a 15-minute chart then. That is what I do. So you can find your own style over time, that what type of and what time frame that excel at doing your trades. So that was how the day is, Davis. So yeah, good day everyone, good night, and I'll see you. And I'll be making on these videos every single day now. I just had some things I need to be doing for the past 2 days, and I'll also make an Instagram page. I'll put description, a link in the description that you can follow, all the viewers can follow it. So yeah, thank you so much.